I don't really look at the price. I look more at the hash rate. And the hash rate over the past 10 years has been in a very predictable, solid bull market, and it just reached new all-time highs recently.
Hmm.
And that's really the nexus of the Bitcoin protocol. Price is not really, it's the least important data point on Bitcoin. The important data points are hash rate, halvings, difficulty adjustment, the emission schedule every 10 minutes. Those are important data points. Price is only reflects on the dollar, because when you're pricing Bitcoin in dollars, you're making a comment on the dollar, not Bitcoin. One Bitcoin equals one Bitcoin. That's never changed. But if you price it in dollars and you say, oh, it's a reflection on the volatility of the US dollar, because unlike fiat money or gold, Bitcoin is free to trade. So it's trading and it's showing volatility in the dollar. So Bitcoin price down, we see dollar strength. Bitcoin price up, we see dollar weakness. Over the past 10 years, the US dollar is in a hyperinflationary collapse against Bitcoin, punctuated by the occasional strength in the dollar. So whenever the dollar might go up on any given day, and so priced in Bitcoin, you see the price down. But that's just a reflection of the dollar. It has nothing to do with Bitcoin. The Bitcoin's path is toward global Bitcoin adoption, hyper Bitcoinization. Market cap will be at 10 trillion, 20 trillion, 30 trillion. And that path is set. It's not going to, there's nothing that can derail it. And any given dollar price on any given day is not really important. Bitcoin is on a vector that it's on its own. It's a new asset class. It was the discovery of a new asset class back in the 2009 when it was first kind of dropped on the web. And the correlation or reverse correlation of the dollar, I think, is the only thing really that is interesting, because the US dollar is a world reserve currency and Bitcoin is competing to become world reserve currency. So the king right now is the US dollar, and Bitcoin's attacking the king. So that's where those two come together. And sometimes that's the end result is Bitcoin replaces the dollar and replaces fiat money and replaces central banks. So that's where it's going. And but it is on something that's compounding at a rate of 200% a year for 10 years. It's not correlated to anything.
Right.
It's like it's a vertical rocket going straight up, and it's going to pass some clouds on the way. Then it'll pass a mountaintop. It'll pass a star. It'll escape the galaxy. It doesn't mean it's correlated to any of those things. It's on its own vector. It's heading on a vector out of any, as Michael Saylor would say, all your models are broken. Right? There are no models suitable to evaluate Bitcoin. The central bank digital currencies are just fiat money, centralized fiat money. So they don't compete with Bitcoin. They compete with other fiat money, centralized fiat money. And what will happen is that one major country will say, you know what, we're just going to add Bitcoin to our reserves. The same way MicroStrategy added Bitcoin to their balance sheet, one of the major countries, central banks of the world, will say we're going to start adding Bitcoin, and then it'll make all these central bank digital currencies look even worse than they already look. It'll make fiat money look worse than it already looks, and it'll make gold look worse than it already looks. So there's no threat from central bank digital currency, because it's just centralized fiat money. It's not different than currently what we have now. We have US dollar is mostly electronic, right? There's very little actual paper floating around. It's a central bank digital currency. I invented a digital currency back in 1996 that I got a US patent on, 5950176. And it's a virtual currency, and it's a virtual trading system, and it's also virtual securities, and it was the first patented commercial prediction market. So, I know this whole industry very, very well. And I can tell you that a central bank digital currency is has no problems, no threat to Bitcoin. Well, it's going to be easier to do, let's say, MMT, modern monetary theory, or UBI, right? So in the States, you already have basically UBI. People are getting a monthly check from the government, and they're not going to apply for jobs because they're getting twice the minimum wage by not working. So that's UBI. So we're already on UBI. So so now we know what happens when you do UBI. Oh, you get inflation. And So in other words, for every dollar increase you get in your UBI, you're going to have to pay more than $1 for that basket of goods at the grocery store. So now you're losing again. You're going to lose and lose and lose. You cannot print your way into having a prosperity. I mean, if that were so, then Zimbabwe would be the richest country in the world, or Venezuela would be incredibly rich. But they're not. They're incredibly poor because they think they can print money to create wealth. It doesn't work that way. Sorry. So as Paul Krugman at the New York Times says, the dollar is backed by men with guns. So the Pentagon, these are the guns that back up the US dollar that eats up something like $1.5 trillion of our taxes. Approximately 50% of all tax dollars goes to the people with the guns to back the dollar. So what happens is, at some point with inflation kicking in, it's going to be impossible to print enough money to keep the Pentagon up and running. So now when you don't have the guns to back your paper currency, you go into a hyperinflationary collapse. And I think we're going to see that in the next year or two. The American empire is just stretched too thin. You know, we got too many military bases in too many countries. We start too many wars. And a lot of empires before us, whether it's the Roman Empire or you could name a bunch of empires, you know, it's really hard to maintain an empire. It gets really expensive. And then the value of your money depreciates. And then your empire collapses. So the U.S. empire is set to collapse. It's probably good for the millennials and Gen Z because they get to rebuild the country in the way they want it. And probably with a Bitcoin standard, or should definitely be with a Bitcoin standard. So the millennials will inherit the country at some point and using a Bitcoin standard. Well, you already see it happening in some cities like Chicago. New York is becoming very violent once again. As when I was living in New York in the 70s, we had 3,000 murders a year, and that was the high. Now it's creeping up again. I think they're on track to maybe 1,000 murders this year. And you have, of course, the city of San Francisco went into complete breakdown. Seattle collapsed. Lawless. Mad Max world. You already have it in some cities. So on the margins, it's already happening. And you had 90,000 people die from opiate overdose last year. That's a death of despair that's caused by money printing. That's right at the doorstep of the central bank. That's Jay Powell, Janet Yellen, effectively killed 90,000 people with their money printing last year. And, you know, they continue to print money. They're going to kill another 100,000, 500,000. Where will it end? Where will the blood shed end for the central banks? At what point do they stop murdering Americans? 1 million? 2 million? When's it going to end?